In this video, you'll discover 7 powerful cost accounting insights that can help you take control of your business finances and uncover where your money is really going. In this video, accounting is a crucial aspect of running a successful business, yet it can often seem daunting and complex. Many small business owners may feel overwhelmed by the idea of cost accounting, or may not fully understand its importance in their day-to-day operations. However, with the right insights and understanding, cost accounting can be a powerful tool for managing and improving profitability. In this blog post, we will demystify cost accounting and provide 7 helpful insights into this important aspect of business management. From understanding the cost of goods to analyzing expenses, we will break down the basics of cost accounting and provide real-life examples to help small business owners navigate this essential element of financial management. Continue reading to get 7 helpful insights into cost accounting for small business. The fundamentals of cost accounting. What is cost accounting? Cost accounting is a specialized branch of accounting that tracks, analyzes, and manages the costs of producing goods or services. It helps businesses understand how resources are used, identify inefficiencies, and make informed pricing, budgeting, and operational decisions. Unlike financial accounting, which focuses on external reporting, cost accounting is primarily for internal decision-making. Why cost accounting matters? By understanding the actual costs of production or service delivery, businesses can improve profitability, control spending, and make smarter strategic choices. It also provides insights into cost trends and supports better forecasting, which is crucial for competitive industries. Direct and indirect costs of cost accounting. Using 7 helpful insights into cost accounting for small business. Direct versus indirect costs. Understanding direct costs. Direct costs are expenses directly tied to producing a product or service, like raw materials, labor, or components. These costs are easily traceable to specific products or jobs, making them critical for pricing and profitability analysis. Understanding indirect costs. Indirect costs or overhead include expenses that support multiple products or services, such as rent, utilities, and administrative salaries. These costs cannot be traced directly to a single product, but are essential for operations. Why the distinction matters. Proper classification of costs ensures accurate product pricing, budgeting, and financial reporting. Misclassification can distort profitability analysis and lead to poor business decisions. Importance of cost behavior analysis. Using 7 helpful insights into cost accounting for small business. Importance of cost behavior analysis. Fixed, variable, and mixed costs. Fixed costs remain constant regardless of production, e.g., rent or salaries. Variable costs change with production volume, e.g., raw materials. Mixed costs contain both fixed and variable components, e.g., utility bills with base charges plus usage. How understanding cost behavior helps. Knowing how costs behave allows businesses to forecast expenses, calculate break-even points, set budgets, and make strategic decisions about scaling production or adjusting pricing. Role of cost allocation. Using 7 helpful insights into cost accounting for small business. Role of cost allocation. What is cost allocation? Cost allocation assigns indirect costs to specific products, departments, or projects fairly and systematically. Benefits of accurate allocation. Accurate allocation helps in budgeting, pricing, performance evaluation, and identifying profitable or underperforming segments. Poor allocation can mislead decision-making and impact profitability. Importance of job order costing. Using 7 helpful insights into cost accounting for small business. Importance of job order costing. What is job order costing? Used for customized or batch-produced products, job order costing tracks all costs for each individual job, materials, labor, and overhead. Advantages of job order costing provides insights for operational efficiency. Precise cost tracking for pricing decisions helps monitor budget and resource usage per job. The utility of process costing. Using 7 helpful insights into cost accounting for small business. The utility of process costing. Managing costs for continuous or mass production. Process costing is applied in industries where products are mass-produced or manufactured continuously, such as chemicals, food processing, or textiles. Instead of tracking costs per individual job, costs are averaged across all units produced during a period. This approach simplifies cost management and provides a clear understanding of per-unit production costs. Process costing also helps identify inefficiencies, monitor production performance, and support pricing strategies for high-volume manufacturing. It is particularly useful for businesses producing homogeneous products where detailed job-by-job costing would be impractical. What is process costing? Process costing applies to continuous or mass production, where costs are averaged over all units produced. Why use process costing? It simplifies accounting for large-scale production, provides a clear view of per-unit costs, and identifies inefficiencies for operational improvement. 7. Helpful insights into cost. Accounting for small business, making use of activity-based costing, linking costs to specific activities for greater accuracy. Activity-based costing, ABC, assigns cost to products or services based on the activities that actually generate those expenses, rather than simply spreading overhead evenly. By tracing costs to processes like machine setups, inspections, or customer support, ABC provides a more accurate view of product profitability and process efficiency. This method helps managers identify high-cost activities, reduce waste, optimize resource allocation, and make better pricing and product mix decisions. ABC is particularly valuable for businesses with complex operations, multiple products, or high overhead, as it ensures decision-making is based on precise cost data. What is activity-based costing, ABC? ABC assigns costs based on the actual activities that generate them, rather than spreading overhead evenly. Advantages of ABC: provides a precise picture of product profitability, identifies high-cost activities and areas for improvement, supports informed pricing and product mix decisions. If this video helped you understand accounting a little better, don't forget to like, share, subscribe, and turn on notifications for more accounting tips and guides. See you in the next video.